Do we have an affordability crisis for homeowners in the United States?
We have a different kind of affordability crisis than we've had historically, Jeff. I'm glad you asked that question. Historically, we've looked at affordability in terms of how much home somebody could buy. So it typically was about the first-time buyer. And if you just look at those metrics, we probably have the weakest affordability we've had in about 40 years. It's been a combination of home prices that have risen between 40 and 50% since 2020, mortgage rates that doubled back in 2022, and escalating costs of property taxes and insurance rates. And that's all conspired to outpace wage growth over the last few years and make affordability really, really very much of a challenge for your typical first-time buyer. And because of that, the median age of a first-time home buyer has jumped all the way to 38 years old. It used to be in the mid 20s, not 10 years ago. So that affordability issue has really resulted in people not getting that first taste of home ownership until much later than they used to. But the other part of affordability that's coming into play these days, and something we really never had to think about in the past, was whether or not an existing homeowner who was still fully employed, had no loss of income, no medical issues or divorces or deaths in the family, whether that homeowner can afford to keep their home. And the reason this has become an issue is because of rising property taxes and soaring insurance premiums. We've seen insurance premiums go up by 52% across the country in the last 3 years. We've seen property taxes go up in lockstep with home price appreciation. And because of that, people that just barely managed to qualify for a mortgage, but figured they'd locked in a pretty consistent monthly housing cost, are suddenly having sticker shock. They're finding in some states like Florida and Louisiana and Texas, their monthly insurance bill is actually higher than their monthly mortgage payment. So the affordability crisis has now moved into the existing homeowner market, and it's something that really is a problem without an apparent or obvious solution in the near future.
It used to be you would buy a home, think about what your purchase price was, what your insurance rate was going to be. You understood what your debt service coverage was. Then you had an insurance bill, which was often an afterthought. You would just go
Mhm.
to your local insurance agent, get a homeowner's policy, and then head off to closing. You knew what your taxes were. They basically stay steady every year. It seems like all the rules have changed, Rick.
Well, the biggest rule that's changed, Jeff, is what's happening with insurance and the prevalence of not just really, really devastating extreme weather events, but the costs incurred by the insurance companies to pay out for damages. We've had multiple multi-billion dollar extreme weather events over the last couple of years, most recently Hurricanes Helene and Milton that devastated parts of North Carolina, Georgia, and Florida, and the traumatic wildfires that hit Southern California. And there are some hidden extreme weather events that are also causing insurance rates to go up. Hailstorms. Texas turns out to be the hailstorm capital of the United States. States like Colorado, who don't find themselves in the news that often when it comes to these extreme events, turned out to have the second most frequent incidents of wildfires and the second most incidents of extreme severe hailstorms last year. But using Texas as an example, the northern area just outside of Dallas, the Plano region, has always been prone to hailstorms. But for many years, that hail was falling on an empty field. Now there's been massive development, a boom in development, both commercial and residential properties that are being damaged by those same hailstorms and causing billions of dollars of damages. And so that insurance outlay is causing premiums to go up everywhere, but most specifically in some of these states that have had the most damage from those weather events.
So as we work through the affordability crisis, I would think the next step is going to be trouble making payments, which is going to lead to foreclosures. Something that no one wants to see, but that would be the next step. Where are we in that area?
Yeah, as you know, I just got back from the annual summit National Association of Default Professionals. And the mortgage servicers who were there were talking about increased rates of delinquencies and the beginnings of a slightly increased rate of default and foreclosure from borrowers who've never missed a payment before. And when they talk to the borrowers, they're finding out that it's because they're having trouble making all of those increased payments, the higher tax bills, the much higher insurance bills. So I do think we'll start to see some fallout. I think one of the reasons we're seeing home prices go down in states like Florida is because people can't afford to keep their homes. So they're now putting them on the market, trying to sell them. And the next buyer has to factor in not just the mortgage cost, but also the property taxes and insurance costs, and aren't able to pay top dollar for those homes anymore. So I do think in some of these markets, we're going to start to see not just a little bit more default and foreclosure activity, but we're also going to start to see an impact on home prices, where those prices are going to come down from these record highs that we've seen over the last couple of years.
Rick, as we think about the affordability bucket, right? You know, property insurance, taxes, and of course, interest on any mortgage that might be out there. What would really move the needle in 2025 to make meaningful difference to make homes more affordable this calendar year?
I always talk about affordability, Jeff, as a three-legged stool. It's the price of the homes, it's the cost of the financing, and it's wages. And right now, for the first time in a number of years, we've been in a period where wage growth is outpacing the home price appreciation that we're seeing across the country. So home prices are forecast to go up about 2.5% nationally this year. Wages are still growing at more than a 4% rate year over year across the country. So that'll make a difference on the margins. Um, we're seeing some markets where home prices are coming down. That will also obviously have an impact on home affordability. And then the third thing, and the one I'm most hopeful for, is we could start to see mortgage rates come down because of all the volatility we've seen in the economy recently, particularly with the on again, off again tariffs and some of the other economic policies being proposed. We've seen the stock market take a dive. And because of that, we've seen a lot of money flow into the bond market. And as that money has flown in there, we've seen bond yields come down. And as they come down, they typically bring mortgage rates down with them. So that combination of slightly lower mortgage rates, slower home price appreciation, and in some markets, a negative year over year growth rate, and wages continue to improve, I think starts to have an impact on affordability as we go forward.
Thanks for the update, Rick.
Thank you, Jeff.